Good evening, all. We're going to start shortly. All right. So, good evening once again. And this is Ajit Mishra. Welcome you all to the weekly webinar of Week Ahead with Religare Technicals. So, in this webinar, we talk about markets, how the markets perform during the week, especially the broader indices, the benchmark indices, the sectoral indices performance, alongside with the top 5 gainers and losers in the Nifty 50 basket, followed by our view on both Nifty and the banking index. And lastly, we end up with a couple of stock ideas which one can look at for the industry next week perspective. We end this with a poll, and then we can ask any question related to the presentation, any particular sector that you would like to know, which we missed to cover during the web presentation. So we can talk all about that during the Q&A. So let's start with a quick disclaimer that the idea behind this webinar is to share the insight based on the technical charts, which market is offering us. It's not a trading or an investment recommendation. So before making any decision based on the information shared, please check with your financial advisor. Now, the positive tone continues. Market, both Nifty and Sensex managed to gain nearly 2% each. Across sectors, we saw participation wherein IT, banking, pharma, auto, and financial services were the top contributors. At the same time, media, except media, which shed nearly 4%, and it has largely due to Z profit taking and Sun Pharma profit taking. But it was the other sectors like reality and FMCG, they ended with energy with the marginal cuts. Talking about the top 5 gainers from the Nifty 50 basket, Bajaj Auto topped the list thanks to the surge that we saw today. It was up around 8% on the week-on-week basis. Then we have Grasim, Bharti Airtel, UPL. UPL is just a recovery. So the overall trend is still down for the stock. It's just that we are seeing a respite after prolonged corrective tone. And lastly on the list, we have Dr. Reddy's from the pharma space. On the losing side, we have stock from across sectors. The BPCL topped the list with roughly around 4.5% kind of a cut, followed by HUL from the FMCG pack. So it's one of the consistent counter on the negative side that we are seeing in the FMCG space, which is gradually inching lower. Then we have SDFC Life. After the initial uptick, we saw some profit taking at the higher levels. Stock was down around 1.5%. And NTPC Coal India also, there was marginal profit taking at the record highs. Now, this is the daily graph of Nifty index. So if you remember that last time we were discussing about 20,300 being the key area of resistance. Prior to that, yes, of course, 20,100 and then 300. So we have crossed 100. We are almost on the verge of testing 20,300. So that will continue to act as an area of resistance. But are we going to make a decisive move the way we were seeing it earlier? The charts are indicating otherwise, means the tone is likely to remain positive, but we should see some consolidation now in the markets. And why I'm saying this, if you look at the last 2 days of candle, Thursday and Friday, today's candle, now we are seeing a bit of a profit taking at the higher levels. These are not very decisive close. Unlike this candle wherein, the close was almost around the day's high. In these 2 candles, we saw that, in the later half of the session, we saw some profit taking in the higher level. So this indicates that somehow now we are seeing this surge from 19,200 to 20,200. Market may take a breather, consolidate in a range, form a base, and then make progress towards the higher level. Above 20,300, 20,700 is something that market could test. On the downside, in case if it corrects, the previous resistance zone, the previous high, close to around 19,919 was the level, but on a safer side, 19,950 should be the first area of support, and then 19,700, that 20 EMA should act as a support. So if you remember that we've discussed about the trend reversal from 19,650, and from 19,650 to we have reached to this mark 20,200. So this clearly shows that the tone is positive. There's no doubt about it. It's just that after such a strong move, there should be some consolidation. So expect some consolidation in the market. The tone is likely to remain positive. Look for buying opportunity on dips. Second key sector that we talk about is Nifty. So Bank Nifty, sorry. See, as you can see the daily graph, post this breakout from this triangle pattern, we have been seeing that it's gradually inching higher. But in line with what we are seeing in Nifty index in the last 2 days, it's also witnessing profit taking at the higher levels. The problem with Bank Nifty in comparison to Nifty is that Bank Nifty still has to cross its record high. We are not at the record highs when it comes to the banking index. What is the positive point? That now we are seeing recovery in the underperformers. Stock like SDFC, Kotak, which was sitting on the sidelines, they are also contributing to the move. Then we have ICICI Access, which is leading from the front. Apart from that, PSU counters, like across the sector, they've also done pretty well. Though the kind of volatility that we see in the PSU pack is the main reason that why we avoid talking much about PSU for the short-term trades or positional trades. But otherwise, yes, we are seeing participation across the board. So what we are anticipating with the banking at the record highs. So Nifty is anyways trading at the record highs. We have reached to that mark in banking index as well. Usually we see some consolidation, once we test this zone. Plus, though we are seeing recovery in SDFC, Kotak, but decisiveness is still missing. Means, yes, the tone has shifted from negative to positive, but it's not very strong enough, to say that, yes, we are going to decisively cross this mark. Having said that, since Axis and ICICI, they are holding very strong trading at the record highs, portraying, very strong technical picture. We believe that the positive tone is here to stay in the banking index as well. In case of consolidation, the earlier resistance 45,500, 45,600, that zone will act as an immediate support. Then 45,000, that is this yellow line which you can see around 45,000 mark. On higher side, once we cross the record high around 46,300, 350 was the zone basically that we made a last record high. Once we cross that mark, then 47,200 could be the area of next major resistance that it might face. So banking, Nifty, both are indicating there could be some consolidation now, but the tone is likely to remain positive. So look for buying opportunity, focus on stock specific approach when it comes to the key indices. Now, as we were discussing about stock specific. So the first name that comes on the screen is Grasim. So Grasim was among the top gainers also, during this week in the Nifty 50 basket. And for the obvious reason, because post this, triangle pattern breakout, it has been hovering in a band, a very narrow band for last, almost 2 months. And finally, we have this decisive candle, which pushed this stock to a new record high with very strong volumes. So we expect this positive momentum to continue in the next week as well. So this is one such stock that one can look at from the positional perspective. Second on the list from the pharma space, Granules. We have talked about this stock earlier also in the webinar. After this base formation around the long-term averages on the weekly chart, very strong base followed by a recovery. But this time around, there was a marginal pullback. Again, it retraced, closer to the previous swing low. And then we are seeing this, rebound followed by a breakout above the previous swing high. So this time around, with volumes, we expect the stock to retest this trend line, which we have been acting as a resistance, and possibly surpass also. So apart from Granules is another candidate that looks upbeat to us for fresh move. Lastly on the list, we have TCS from the IT space. So TCS, again, a very clear triangle pattern breakout here, followed by dull movement for almost 2 months, and then the resumption of trend with volumes. It's a classical pattern which shows that post breakout, those who have entered into the stock, they have exited those positions after lack of any momentum post breakout, and then set for a surge. So IT, in fact, as a sector, we've discussed about last week also, we believe that the reversal has been done. There could be not very strong outperformance, but yes, we are not expecting any underperformance either. We expect IT to trade in line with the benchmark now. So with rotational buying across sectors, including IT, that's why we are betting that this positive tone is here to stay, despite the consolidation, despite the profit taking that we are seeing at the higher levels, or at times the mixed global blues as well. So net, the tone is positive, but yes, we may see some consolidation after 1,000-point kind of rally in the Nifty index, and it's healthy as long as we are not seeing major retracements. Means in case if it manages to hold the support area at 19,957 in zone, it's a healthy consolidation. It will be much better that if it manages to hold 19,950 and then witnesses recovery. At the same time, there is no shortage of buying opportunity on stock specific front. Grasim, Granules, TCS. These are just few names that we have discussed during the presentation. It's a long list, but yes, the concern lies with the broader indices, mid cap and small cap. So during the week, we had this one session wherein both indices, slipped nearly 3 to 4% in a day. And in the last 3 trading sessions, yes, we are seeing recovery, but not all stocks are recovering in line with the recovery in the index. So now one should be very careful in stock selection, especially in the broader markets. So yeah, with this presentation ends. Now we'll do a quick poll and then we can start the Q&A. So please fill in your feedback and then we can start with the Q&A session. Please quickly fill this feedback so that we can start with the Q&A. And once you're done with the feedback, you can start posting your question. So please don't use that raise an option button. You just post your question using that Q&A tab. if you're done with the question, you can start posting your, with the feedback, you can start posting your questions. As I always request, please stick to these sector specific and general market specific queries, not individual stock specific queries, please. All right, so let's start with Q&A now. All right, so first on the list, we have question on AMC stock from Mr. AR. The long-term view. So long-term, see what chart indicates is that the prolonged downtrend that we were seeing in the AMC counter, that seems over. So that is there. But are we going to see this momentum continuing or stock making a new record high? That seems pretty early today, because this recovery should strengthen further. We should form higher bases, and then we should march further northward with strong volumes. So as of now, yes, the bottom seems in place, but for the long-term view, we feel that one should wait for the quarterly numbers, see the fundamental aspects and other things. As of now, yes, they are in much better position in what they were 2 quarters away, 2 quarters back. So one can continue to hold, if the view is long term in the NC stocks. But yeah, be selective in this space, because when we see the reversals, the reversals are equally sharp. So don't over invest in one particular sector is something that I recommend. All right, Avik Ganguly has this question: is it wise to invest in metal and raw material firms? So metals and related sectors. See, metals, yes, I believe that is still a good bet. Despite the mixed clues that we are getting from the global front, but the related sectors means anything which is offering the sub products or something like that. It's very difficult to comment that the demand is going to be very robust, and we're going to see a very strong trend there also, because in metal space also every now and then we are seeing like bit of a volatility and choppiness every now and then. So keeping that in mind, I feel that within the metal space, one should stick with the top performers, instead of stocks which are witnessing excessive volatility. So just to name few, that Tata Steel, JSW Steel, General Steel, Hindalco, they are the top performers in terms of less, choppiness. They are volatile, but in comparison to what we see in National Aluminium, SAIL, Hind Zinc, Hind Copper, they are comparatively less volatile. So stick with these names in case if you're looking for trading bets in the metal space. Okay, thank you, Mr. Subramaniam, for the feedback. It's a very nice and clear presentation. And next we have, okay, this is something that may help all that. There's a question from Mr. Prakash Kumar: which stocks are less vulnerable in case of the market correct? So instead of stocks, we talk about sectors, which looks comparatively better. So one which we clearly mentioned is IT, because why IT? Because we have had decent consolidation and corrective phase in the IT majors. The IT index was in a range for almost 1.5 years, and now we are seeing recovery. So it's not that they are trading at the record highs. We still have decent room when it comes to the IT. In case if the correction is normal, means we see 0.5% kind of a cut, 1% kind of a cut, and then followed by consolidation, then I doubt that there'll be any particular sector which might underperform. But in case if it deteriorates further, then maybe we could see some pressure in auto, banking, financials, because they have done pretty well. Overall, banking selectively might continue to do well, but underperformance, they might underperform the market in case if the correction intensifies in days to come, which is not the scenario as of now. So I feel that instead of maintaining a sector specific approach, maintain stock specific approach. Why I'm saying this, because as we've talked about the banking also, Axis and ICICI, the comparatively better structures, stronger performers in comparison to SDFC and Kotak. So any day I would prefer the top performer instead of stocks which are catching up until we have a favorable risk to reward ratio. Similarly, in the IT space also, just to name that SCL Tech, we have kept on mentioning, is the best performing name in the large cap IT basket. And today is trading at the record highs, while TCS and Infosys still have a long way to go to cover the distance. So by maintaining this approach that which stock correct less when the market corrects within this particular sector, you should choose those names while you are trading. Because when the market trades in sync, then they tends to outperform. Right. So next question from Mr. Subramaniam regarding cement, FMCG, and auto. So cement, yes. See, not as a sector, I would say again, as I've just mentioned that though we are seeing participation across the board, it's not any particular sector which is not contributing to the move on a rotational basis. But instead of maintaining sector specific approach, because let's take an example from cement, ACC, Ambuja, they are struggling for other reasons also, but yes, despite being a cement counter, they are struggling. At the same time, Ultratech, Grasim, Ramco, Dalmia, they all are doing well. So focusing on sector instead of stock might not yield you good results. So within the sector, try to identify stocks which are trading in line with the markets and stick to those names. Similarly, for FMCG, HUL is not participating. Britannia is also not participating, though we are seeing a bit of a base formation. At the same time, Colgate, Marico, somewhat Dabur, Imami, they are doing pretty well. And in auto space, M&M, Maruti, Tata Motors, Eicher, now we are seeing a bit of a recovery, Hero MotoCo. So if we talk about top two names, then Maruti and M&M, they are leading from the front. Then we are seeing catch-up move on the others. And yes, Bajaj Auto, how we can miss Bajaj Auto, because it was among the top performer in this week also and trading at the record high. So maintain stock-specific approach in all these sectors. Okay, next question from Shamshad Ahmed. How will the Nifty move by this year end? Okay, so I feel that it's very kind of a interesting exercise that we try and project something that which is still 3 months away. Instead of doing that, I feel that stick with trend. Means if the market is saying that the trend has reversed, we should reverse our view. Instead of sticking to our view that no, we were anticipating that index should be 21,000 mark and witnessing corrections, it's a buy opportunities, ignoring the fact that the trend has reversed. So if you are a trader, you have a time horizon, let's say less than a year, then I feel that instead of preempting the possible tops or bottoms, stay with the trend. And as of now, short term, mid term, everything indicates that the tone is positive. Are we going to stop at 20,700? Are we going to scale to a newer high? It's very difficult to comment. But as of now, we are eyeing 20,700 as the next area of resistance in the Nifty index. So again, there's a query on what kind of up move that we are anticipating in these stocks, which were shared. So there's not a recommendation. Again, I would just reiterate my view, my disclosure. So these are not recommendations. I've just shared my observations on stocks and market. It's now up to you that how you're going to take that. It seems positive to me. They may move 5% higher or 2% lower. So please use your own discretion when it comes to converting those ideas into your trading position, or check with your financial advisor. All right, next question from Mr. Vanamalai. Is it a good time to invest in the sugar stock that produce ethanol for the long term? So yes, this theme is not new. We all know that this is going on for the last several years now. And any progress, any new news fuels up move in the sugar counters. But we all know that these moves are usually short-lived, except a couple of names which are making consistent highs. Mostly witness period of long consolidation. So I feel that in case if you are making investment based on this, one should look for stocks which are fundamentally sound, just not on the basis of they are producing ethanol. What kind of debts they have on their books, and the other factor they should also consider. Check with the fundamental guy for this if you are making a long-term investment, specifically in this particular sector. Okay, which sector is better for investment for next 6 months? IT for sure. IT is something that one can definitely bet, because it's as I've mentioned a couple of times during this webinar itself, that it's a decent consolidation that we have recently ended, and plus all the sectors are anyways trading at the record highs. Doesn't mean that they can't go further higher, but from the safety perspective, from the perspective of, let's say, visibility, IT looks comparatively better to me. Mr. Rajiv Kumar, as we were discussing about automobile as a sector. See, if you are investing, then I don't think so. That's a big challenge, considering that all the factors are in sync. But yes, your time horizon and investing Maruti at 10,500, there is a possibility that we may see some correction, some profit taking after the recent record highs. Similar holds true for M&M also, Bajaj Auto also. But the sign of reversal is something which is not there. So you can, if the time horizon, let's say for over a year, and then you can definitely look. Okay, next question from Mr. Raghu on gold-related stocks. See, the stocks were in infancy, in the recent month, but now I am seeing that it's done, considering the kind of return that we've seen this shorter duration. Plus, somehow we usually see this trend changing, that any particular sectors comes into flavor, and then we once it saturate it, people move to the other sector. So I feel chasing them without fundamentals is not a good idea. So if things are in sync, which I'm not sure of, because I don't really closely track gold stocks, one should avoid stocks which are in fancy. Stick with names which are consistent in nature, which trades in line with the trend, with less corrective tone that usually we see when the market corrects. So in case if you miss this webinar, you can see this webinar online also. We post a live of this on our YouTube channel. So you can go there and check this webinar. All right. So with this, we have answered all the queries, couple of queries related to the stocks that we have skipped. So please understand that anything related to sector is okay, but stock specific is something which is individual. So it's prudent not to, waste others' time. All right. So Yes. So thank you everyone. And next week, yes, next Friday, 22nd, we'll connect again. Till then, take care. Thank you.